SAVCA 2015, a lot of local fundraising, a lot of local managers reached first close, which was quite exciting. Again, quite a lot of diversification across the sectors. So infrastructure funds, buyout funds, real estate funds.
The fundraising is certainly taking longer and longer, and I think the South African situation and the political instability is raising a few questions and making it slightly difficult for us. So what we're seeing is a lot of funds are having to actually extend their timelines for fundraising.
LPs are looking for track records, they're looking for experience, they're looking for private equity funds that can demonstrate that they understand and know how to operate in these difficult circumstances. So track record aside, if you can demonstrate to LPs that you've been here, done that, the current macroeconomic climate does not faze you, you're going to get money. First-timer fund manager or fifth-time fund manager, you're going to get cash. I'm actually quite perplexed by the currency conversation because South Africa has had dollar investors, euro investors in South Africa since 1989, if my memory serves me correctly, via Ethos and Braid. I want to know how did they manage the currency fluctuations, because in 1996, in 2001, 2003, Asian crisis comes to mind. There was a stage when the dollar was much worse than it was, inflation was much. What did they do then, and what did the return profiles look like of the vintages of those funds? So it speaks to experience again. Unfortunately, the answer is probably going to encourage LPs to go back to the experienced people because they knew exactly what to do, because those LPs that were there then are still here now, according to my records.
Fundraising is always a tricky business, but we have progressed quite well. It's taking a bit longer than we anticipated, but in the end, it's you have to work hard, and so we're almost there, and we'll conclude our second fund shortly. Total fund size is what we're targeting is $175 million US dollars for the final close. We currently looking at a first close of just over $100 million. It's always interesting to see the angles at how the different LPs look at the fund, and you always have a sort of a mix of sort of expectations that in the end you have to marry.
We've only opened our shop in November of last year, setting up offers. We've had conversations confidentially with some potential clients. It's an infrastructure fund of funds. I think I have the required skills, and also knowing and understanding the pension fund industry and the Regulation 28 and all of that. I think we are quite unique in our offering and believe that what we have to offer may be quite exciting. It does require a lot of education for the trustees because it is fairly new for them. It's uncharted territory, so it does take a little bit of work. So we understand that the fundraising cycle may be a little bit longer, especially because infrastructure in its nature is longer gestation. So we may be looking at a fund of longer than 12 years, whereas general PE funds are about 10 years.
Definitely takes a lot longer than one normally anticipates. We've most probably been at it for the better part of going on 6 months now. And I think you come to learn that in the private equity space in particular, you're looking more to 18 to 24 months. But I think what's unique about the Capital R fundraising is that it's kind of partly a fundraising for a secondary, because we get the ability to bring the Capital R existing portfolio into the fund. And then we're obviously trying to raise additional funding in the form of dry powder for some of the pipeline of opportunities. So it's a combination, if you wish, of a secondary and a primary fundraise, and that has its pros and cons. I think the pros side of it is, people get a perspective around what are they buying into, at least for part of the fund. And then our pipeline is very much around capitalizing on the existing portfolio. So in terms of capitalizing on the existing portfolio, people can understand the themes, they can understand the strategy and what we're trying to execute against. But having said all of that, it takes time to understand the team and get to know our track record, get to diligence our existing portfolio, and get comfort with what the pipeline of opportunities are. So we are still hopeful that a first close is achievable in the next 2 to 3 months, and that's about 30% of the size of the fund we're ultimately looking to get to. And I think it's fair to say it'll take another at least a year to get to the full close. And I think that's been optimistic. Obviously, that's parking the realities of the economy, the political uncertainty, and those realities. But we march on, we soldier on.
Look, we're very excited about having closed our third mezzanine fund. I think what's important is investors have shown confidence to participate in Fund 3. And more interesting is 60% of the fund will be allocated as a dollar fund, allocated for the rest of Africa, and 40% will be for South Africa. And we've had investors from South Africa giving us dollars for the African fund, and investors offshore giving us rands for the South African fund. So it's really a two-fund structure. I think it's a first for the South Africa, where we've been able to have a dollar fund based domiciled in South Africa and a rand fund in South Africa. So in total, as I said, 4 billion, around 60% for the rest of Africa. Fundraising is never easy, but we were, I think, fortunate. It was very efficient, I think, with the help of the whole team, and we, I think, managed to do it in a relatively short space of time, probably around a year to 18 months. Yeah.